Hello, my name is Dan Hirschovits. I'm a partner in the Securities and Capital Markets Practice Group here in Paul Hastings' London office.
Hello, my name is James Lansdown. I'm a Senior Associate in the Securities and Capital Markets Practice Group here in Paul Hastings' London office. Welcome to this 4-part video series where we will provide a series of insights for UK commercial companies considering listing on the main market of the London Stock Exchange. In this first video in this series, we introduce the key parties that make up the project team for an IPO on the London Stock Exchange's main market, and the roles each of them plays in bringing a company to the public markets. One of the key reasons a company seeks to IPO is to raise cash or to realise cash for existing shareholders. Companies undertaking an IPO may raise fresh capital through the issue of new shares, and existing shareholders may also sell all or part of their holdings to realise value. Whether primary and/or secondary proceeds are raised varies from deal to deal and impacts the company's rationale for the IPO and the way in which the IPO is structured. The company's management and board of directors are central to the IPO process. Executive directors will lead much of the investor engagement, explaining the business model and strategy, as well as executing and delivering on it. Independent, non-executive directors play an important role by providing challenge and oversight, and many companies add new independent directors during the preparation phase of an IPO to strengthen governance in preparation for public markets and having outside shareholders. Having a majority independent board aligns with expectations under the UK Corporate Governance Code, which main market companies are required to comply with or explain any departures from. Investment banks will act as underwriters of the IPO and will guide the transaction from start to finish. They advise on valuation benchmarks, coordinate investor marketing, and ultimately build the book of orders from potential investors in the IPO. Underwriters also commit contractually to acquire shares at the IPO price if investors do not, providing underwriting support. One of these investment banks typically acts as the company's sponsor, which has regulatory responsibilities mandated by the UK Securities Market Regulator, the Financial Conduct Authority or the FCA. The sponsor is required to provide formal confirmations to the FCA at the time of the IPO about the company's compliance with the listing regime. Some companies will also appoint an independent financial advisor. Their role is to provide a third-party assessment of the investment bank's recommendations, including in relation to valuation and investor engagement, independent from the underwriters, and to support management when negotiating commercial terms with the investment banks. Dan.
Given the legal and regulatory demands of an IPO, lawyers play a significant advisory role. In particular, the company's lawyers help ensure the business is ready to operate as a listed company from day one. The lawyers will assist with drafting the company's prospectus, advise on investor marketing materials, undertake due diligence, implement governance policies and procedures, negotiate the underwriting agreement and lock-up arrangements, and oversee any corporate reorganisation needed for listing. Selling shareholders, if involved, may also instruct their own lawyers. Reporting accountants are responsible for preparing and auditing the historical financial information on the company that must be included in the prospectus. They also help to assess the company's working capital position for at least the 12 months following the IPO, and to review its financial reporting procedures to ensure readiness for public company life. Their work is a core part of the diligence process and provides assurance that the financial information presented to investors is robust and that the company can meet its ongoing reporting obligations following IPO. A registrar is appointed to manage the company's expanded shareholder register following the IPO and to support settlement of the company's shares through CREST, the UK's electronic settlement system. The registrar also assists with ongoing administrative requirements, such as distributing shareholder communication and managing dividend payments. Companies often engage public relations advisors to help manage external media and other public-facing messaging, and ensure the equity story is communicated consistently across regulated and other media news channels. Finally, two institutions sit at the centre of every UK IPO. The FCA, which assesses the company's eligibility for listing and reviews and approves the prospectus and oversees regulatory compliance with the UK listing regime more generally, and the London Stock Exchange, which sets the admission and disclosure standards and manages the admission process for companies seeking to be traded on its main market. We hope you have found this video useful. If you would like to discuss anything covered in the video, or want to discuss a proposed UK IPO, planning for one, or any other type of capital raising, please feel free to get in touch with us. Thank you for watching.